The S&P 500 and the Nasdaq 100. We're not going to waste any time. We're going to get right into what's happening. Now, obviously, going into yesterday, I'm going to be really transparent. And when you come to the channel, you have to know that I'm going to tell you exactly what I think is going to happen and give you my full opinion, right, wrong, whatever it may be, right? So going into yesterday, obviously, I expected some more downside coming into today, right? Just food for thought. Now, again, before I get into anything, I do want to highlight what I did, my trades on the day. I did end up getting a Tesla put. I want to remove that. And I ended up closing here near the end of the day for like 6% loss. I went really heavy into this, so I would go into that here in a second. But the loss wasn't that bad, $400 in comparison. The winner that we had yesterday was over $2,000. So food for thought going to both sides of this. Anyways, so jumping into this, what are we looking at? Coming this morning, things were pretty interesting. We got the jobs data, and jobs came out pretty much as expected, a little bit on the higher side when you look at unemployment rate overall. Nothing really crazy, but when we come into like the 15-minute, and when that news came out, 7:30 Central, 8:30 Central, I believe, you started to see some kind of immediate upside going in from there. So you can see about right here, 6:30, and then coming in at 7:30 right here. So to tick up from that news, market opens right here at 8:30, you drop down and then start pushing back up. Basically from that, we saw about an hour and a half of upside going into 10:30, which is basically when London closes. And then from that point till basically now, you've just trended sideways. Nothing else happened. We have about 20 minutes left in the day, going into power hour. I still don't think much is going to happen, and I'll go into exactly why. So when this happened around noon, around right here, I started getting into my Tesla puts, and I started establishing that position. And then we flipped back below the 120 area, and that's ultimately what we were looking at. Basically, last hour of trading got back above this. I didn't like how we were stagnating. I wanted to see us continue pushing down, so I just cut the trade and just basically said, look, it's holiday weekend, want to step away. And I just want to explain that before I go any further. Now, going into what's happening on ES and Nasdaq. Again, I do not want to take away from any type of move that you had today. Decent move, to be honest. Great move. ES specifically, you were down here. Coming into after hours, you were pushing up. Into jobs data, you pushed up even higher, and you're ultimately pushing back into this previous range that we had established. Go back to the 2 hours so you can see. You're pushing right back in, to this range right here, pushing into potentially your 2 hour demand right here. So this is your 2 hour demand or supply level, if you will. And then your next level obviously is going to be the big one up here around 39.20 on ES. So really close there. Want to mention though, on higher time frames, like I always say, that's what we have to look at. What's happening on higher time frames? Again, I'm just giving you my viewpoint. Still downtrending, lower lows, lower highs, okay? You didn't make a higher low right here, so I do want to say that. But that's what we're looking at right now. In Q, a little bit of a different story. This is where we've seen a bulk of our volume. If you're in Discord today, then you heard me say this morning. Basically, if we look at volume, just food for thought here on SPY, you're at 48 million. Your average volume on SPY each day is around 80 million on the past 30-day average, okay? Now, I'm going to anticipate after hours you hit at least, let's say, 62 million, right? We'll give you about, 12, 14 million in the after hours. Let's say that happens, okay? Maybe it does. Maybe even push to 70. You're still below. Look at something like Q's, you get a little bit of a better example here. Go into here, and you can see your volume was pushing better. For instance, Q's average volume, I believe, is closer towards 40 million on the 30-day average. So you're definitely really close to that range there. Okay. And you're getting a bulk of that volume in the beginning of the market, which is something I want to focus on lately. So if we look at Qs, we look at SPY, you get that the beginning of the day move up, and then typically been like scaling back down throughout the end of the day, and sellers step back in. That didn't happen today. I just want to highlight that. You got some good behavior, good decent movement. But the problem here again relies and comes back to volume. That's my big question mark. Is volume is not changing this direction. It is not convincing me of anything. So going to tomorrow, even though I still have to expect downside. Why? Because of the overall trend, right? Nothing's really changed. We're still in the downtrend. We haven't broken up yet. You're getting there. The potential is there. Again, for me to be bullish, we have to get back above around 11.4, roughly. Get above 11.4. I could flip to seeing us getting back to 11.8. But until then, I have to remain with this downside thesis. That's just what's made me my money and ultimately what's been playing out. So again, I just want to highlight that. The next thing I want to say, though, before we go any further is also about, having a plan when you enter the day. We had a really interesting thing said on the day specifically. Someone was talking in Discord And I wanted to just throw this out there before we go any further. They were saying, look, Netflix ended up running today. I missed the play. I didn't make any money on it. This, that. I just want to say something. Netflix did have a good day. Yeah, you popped up from 277. You went to highs of 295, came back down, trying to push back up. I just want to say, if you're going into the market every day and you have a trade plan, so like for instance, my trade plan, I want us to stay at least below 10.9 on NQ and follow up with a rejection from that point. Now, when you start to push up like this, do I change my whole thesis? Do I change my whole trade plan based on everything going basically the opposite of what I wanted to happen? Does that make me a bad trader also too if I'm just wrong on the day? I challenge you to not trade when your trade plan doesn't happen. Okay, so let's say I come into the day and I'm looking for downside. Like for instance, the past 5 days we've been just playing the downside, right? Now, the one day things change, do you flip everything and you say, okay, time to FOMO into calls? No. I'm just going to tell you right now, based on my strategy, what I'm doing. Just because, yeah, you flipped up here, get out of your trades, stay liquid, do whatever you got to do, reassess what's happening here, and understand the guidelines for either continuation or, continued downside here. So for instance, tomorrow I'm going to be looking at Nasdaq and saying, look, if Nasdaq gets back below 11,000, we're probably bearish. If we can continue to push up over 11.1, maybe we can see a push up to, supply around 11.35 before the weekend. Also important to realize it is a holiday weekend. So what does that mean though? Just because things don't go your way does not mean you have to trade. And that's the biggest thing that I try to teach and tell people. You know what's better than losing money? You go into all these trades and take a million different trades a day. Again, I really recommend people like 1 to 2 trades is probably the way to go for myself. That's what I recommend from me. Do your own DD, do not financial advice, do whatever you got to do. But I'm just going to say though, I challenge you when things don't go as you anticipate, get up and just walk away. Okay? Because unless you're really doing this full time to where it's your full on living, first of all, you really shouldn't be trading at that point. But you're not really relying on it that I have to make X amount every single day. And really, you shouldn't look at it that way. You should look at it, per month or per week basis. That's how you should really be looking at your profits here. And even here on the end of the day, I made the right decision by cutting because you're pushing up here. But looking at that, you should come with that mentality is I don't have to continue to trade. I don't have to take 30 trades a day. Things going to go my way. My overall analysis was off. Let me take a step back. That is most of the time going to be the most beneficial thing for you. Rather than trying to catch back up on trades or take, 3 more trades, figure out what happened that was maybe out of the ordinary. Figure out how to elevate your game going forward. I just want to say that before we go any further here. Now, going back in here, I do want to look at something as far as the VIX. VIX, a lot of stagnation, got some slow downside on the day, but you're still kind of in this little pennant type thing you have going on here. I want to mention that. And you're still above that $20 range. So I'm still looking at this, still interested, but I have to say right now, it's just really slow, lackluster movement. Not ideal. Not a huge fan. We can go and look at some golden sweeps also, and there's not really a heavy aggressive call flow coming in either. Now, a lot of people are saying, well, Tyler, the put flow over the past week has been so bearish. It's been this, it's been that. Guys, I'm not going to lie to you. I don't really care too much about if the put flow was overwhelming, okay? If I see big amount of buyers pushing us towards the downside and they're deep in the money, that usually is a big sign that we're looking bearish, okay? If I look at February and January, into January, but it's really rolling out more into February and March now, you're going to see a lot of those in the money positions are still on puts, right? So that's just my overall viewpoint. Now, again, I have been saying, when you're down here, it's going to be tricky. It is very tricky because we did invalidate, again, if we come back to the 4-hour time frame, we can see we have invalidated this demand, right? That's why it's a previous demand. You invalidated it, popped up here with some decent volatility, might I add. But I want to say, we saw this happen before. We pushed up, next day, dump. Pushed up, day later, dump. Okay, so I just want people to tread with caution. Even though I'm bearish, I'm not in any puts yet, right? My plan went, AWOL. It didn't happen today. So I said, look, I'm going to take the quick L, take a step back, come back at the market tomorrow, the end, right? That's just, I think, the mentality that's going to help people as far as moving forward. You shouldn't jump into this with the expectation of I need to make $1 million today and the next day and the next day, okay? So I'm just going to say that right now. It's going to help you long term down the road. Before we go any further, I have to ask you to consider doing two things: like and subscribe. I'm trying to give you content every single day so you can stay prepared in this market and you get an unbiased standpoint like I just gave you right now. I'm going to give you more and more content day after day, but let's get back into it. Also, if you're not, I recommend subscribing to Twitter. I'm trying to give you the most content ever and impossible, right? As far as YouTube, I can give you so much there, and I can give you more here on Twitter. Twitter's been lackluster just because the price action's been lackluster, right? Sorry, I can't even speak right now. But that's what's been going on. And if I'm not trading, then I can't post more content, right? So if I'm not trading too much throughout the day, can I post 1,000 different charts if I'm not really interested? No. So that's what you guys know from me. If I'm giving you more content, that just means I'm more interested in the market, right? I'm never just going to feed you and force feed you nonsense, guys, because at the end of the day, you guys come back because I believe you think that I'm honest. You think that I'm going to give you an unbiased standpoint or give you my true opinion no matter what. And most of all, I'm going to put my money where my mouth is, right? That's why I believe personally I'll come back. So when I'm not posting much or I'm not going over 30 different stocks, there's just not much I can do. So again, today's going to be just a recap of some things that I got wrong or things that kind of have went AWOL, if you will. Number one, Microsoft. So I ended up cutting my Microsoft at a 10% stop loss on that. But time after time again, every time it would come down to lows at the 234, I just kept cutting like half to 75% of my position. When it would come back to 238, I would add more. So I added more this morning around 238, 239. Ended up cutting once you got like almost to 240 here. It was down 10%, had to let it go. And so right now you're mounting back above this area. Another interesting thing I'm looking at too is Apple, and this is probably one of the weaker things on the market. I'm just going to tell you right now. So if we look here at something like the 1 day or the weekly time frame, your previous 52-week lows are right here, and you're mounting back above them. But what I will say is if we look here at the weekly chart, you're still in pain. However, I'm not going to lie, your weekly chart doesn't look terrible, but I'm still going to say you're still breaking down out of this, and it doesn't look the most ideal. Again, that's my opinion. Next up, Tesla. So you got a little bit of love down here on Tesla about the 107, 108 mark. However, what I do want to tell you is that Elon apparently, again, this is kind of what's being said all over the internet right now, and it's I don't know too much to think about it. Tesla CEO Elon Musk could have had his first margin call on his Twitter loan. Okay, now this is food for thought, things to think about when it comes to Tesla. People need to be careful, and I recommend a lot of this as a day trade, but I did try to go for a swing on the day. If we look at something like the 2 hour, it's really interesting to think about. You get a lot of this downside throughout the day, and you started getting upside here near the end of the day, reason why I got out of it, right? But it's worth mentioning, you weren't seeing a lot of upside. If this stuff turns out to be true, this could definitely turn into a snowball effect and start pushing us back down. But again, I'm not long on anything yet as far as options go. There's just no need for me to start dumping money into long positions on options specifically. I think that's just silly, right? It's important to realize when we look at something like ES and NQ, I always recommend looking at long-term charts. Let's just look real quick. And again, ES, you're trying to break over that right there. If we really zoom out, let's go to the 1 day chart really quick for you. Every time you bounce, which again, when we bounce, typically we've caught majority of these moves. What has happened though when we really look at, the data of what's happened here? What usually happens? It's a trend to the upside, right? There's no need to try to catch the knife on the first day. There's nothing, there's none of that, people. We don't need that, right? It's worth mentioning. We have continued days up typically. So when we look at something like, for instance, Microsoft, when it started bouncing way back, went down here. You had your first green day, you went from basically 210 to 221. Again, just steadily moving up on our supply and demand levels also. Going into Apple, right? Continued. This is the daily chart, right? So I just want people to realize this. Don't feel like you have to knife grab plays, right? Just because I'm looking at the market bearish does not mean that I'm not watching the trend and preparing for potential plays if we do in fact get a bounce or buyers do start to show up. Now, where you're going to know buyers show up is going to be all based on volume. I'm going to tell you that right now. That's your answer. If you want to know anything, when buyers show up, you're going to know based on volume, okay? For instance, when we look here at what happened when it comes to QQQ, to when he found these 262 lows here, right? Where was your open? It was at 270. You went all the way down to 262. Look at where that happened. Buyers started to show up once you hit that 262 level, started to bounce, and then kind of came back down, and you started bouncing again today. I'm not convinced with the action that we're seeing on this week. Why? It is a holiday week. One, we need to understand that. And then two, the volume just isn't there for me, okay? We can go back and really see when we started getting a push up to where that volume was. We had volume when we started really creating a pivot on the market. That's what we really want to see. And again, I say the same thing over and over. People might get tired of hearing it, but again, I say the same thing so I can get my point across to you, and hopefully you'll learn or get something out of this channel, right? I hate for you to come to the channel and get nothing out of it. So that's my viewpoint, things that I'm looking at here. As far as yields, this is one area that I do want to talk about on the day, is they did get a little bit of downside here on the yields, but the inversion is still intact, or as far as your higher low trend here, as you can see, you're still in that higher low trend. We want to start seeing the 10-year get back above the 30 if you're looking for downside, okay? I want to mention that if you want to see downside, you want to see the 10 get back over the 30, you're still really close, as you can see there. We go into TLT, you started getting a little bit of a bounce here on TLT. And it's really interesting. If you use any like of these apps as far as Cheddar Flow or Webull or Flow Algo, I really hate Webull, by the way, but if you do, you can like see the little chat rooms they have going on in here. And I read something and someone was saying, well, thank God we sold out of our TLT position, right, to the downside. And I was just thinking to myself, I'm like, if you really look at the daily chart, I'm just saying, does it look that great? You know what I mean? And that's what I really worry about, and I really am concerned and making sure my viewers understand my viewpoint when it comes to the market. I love the 5-minute, the 15-minute, and the 1 hour. I use those, right? But the base of everything I do is based on the daily, the weekly, maybe even the 4-hour chart to a certain extent, right? It's the larger time frames that really make me my money in the long grand scheme of things, okay? If I don't really care too much if we look at the 5-minute chart and something's going up, right? That's not too concerning. I can look at Tesla today and say, oh, this thing looks really bullish, right? On the 5-minute chart, you're gapping up, moving up. But if I come out to the 1-day chart, is it really bullish? You know what I mean? These are things you have to consider. And this is like, again, the grand scheme of what's happening, just in a downtrend, pushing down. So this is what I recommend to you guys. Just slow down, really take a step back sometimes. If your plan does not happen throughout the day, again, take a step back. Use it as a learning point, not a point of losing money, right? Or not a point of chasing money, right? You should never be chasing money in this market, right? You should be letting these plays come to you and letting your setups play out, right? Less, in my opinion, is more, specifically when it comes to trading. I'll see you guys tomorrow. Again, try to be as transparent as possible. Have a good one.